Hey, Steve Saretsky here. As always, it's the Friday video. Didn't want to miss this. This is coming to you from Costa Rica. Just on vacation here for a couple of weeks. But yeah, I wanted to quickly touch on a few things. First off, in my last video, I mentioned that I was going to be on a podcast with Jared Dillian of Malden Economics. That has now been released, the Dirtcast podcast. So I'm going to put a link to that below. Basically discussed, Canadian real estate with him. Canadian policies, Bank of Canada, and just an overall really good, in-depth, thorough podcast on the Canadian real estate market, obviously with the focus on Vancouver, some of the things that I'm seeing on the front lines, etc. A little bit about Jared. Jared is obviously a very well respected macroeconomic and institutional investor with Malden Economics. He's got a pretty big following on social media as well as on his podcast, so it's quite privileged and honored to be on that. So again, if you want to listen to that, that is in the description below. I'll put a link to that. As I mentioned again before, I put together compiled a list of data for 2017, basically taking a year in review of taking all the 2017 data that we had for Vancouver. That I worked with my stats team to do that. We put that together, basically taking what was the average sales price for the entire year of 2017, comparing that to the average sales price of the entire 2016, 2015, etc. I think we dated it back to 1998, so some very good historical data for you there. I'm looking at two very different markets, Vancouver Detached and the Vancouver condo market. The Vancouver Detached average sales price for the entire year, so this is not just 1 month, comparing it on a year-over-year basis. This is for the entire year. As I mentioned, the average sales price for detached market dropped 6.5%. Total dollar volume, which is the amount spent, total dollars spent in the market dropped, I believe, from 8.6 billion in 2016 down to 6.4 billion in 2017. So that was a 25% drop in the total amount of money spent in the detached market. And of course, that's really a result of a huge drop off in sales. I think we've had weak sales over the last 18 months, which is allowing inventory to build up, where inventory levels are back to more historical normal levels. That's beginning to put that downwards pressure on the prices, and obviously you can see that in the 6.5% decline. And then obviously on the flip side, you have the condo market. The average sales price increased 13% on a year-over-year basis. The dollar volume still increased from 5.1 billion in 2016 to 5.5 billion in 2017. So again, it's really just a tale of two markets having, plummeting dollar volumes in the detached and then still rising in the condo market. To me, it's quite indicative of sort of who's propelling the market forward. Obviously seeing a lot of first-time buyers, as well as I think a lot of the speculation has shifted to where can I make a return, and that's obviously right now is in the condo market. So it'll be very interesting to see how that shapes up in 2018. The condo market, obviously, in the last couple months, we just put out my December condo report, so you can check that out. I'll probably put a link to that below as well. That is starting to taper off some of that price growth. I think, some of that is to do with seasonality. The average sales price per square foot for Vancouver condo dropped down to $1,020. So it was the second monthly decline, but I'm not really putting much weighting behind that. Right now, inventory is at historic lows in the condo market, even lower than it was December a year ago. I think it's down by roughly about 20 to 30%. It's never been this low in the past 10 years. And so I think that's a very telltale sign. It's hard to see prices coming down until you get that inventory to creep up, which is what we've seen in the detached market, where you've had a weakening of sales, which has allowed the inventory to build up. And now, of course, it's pushing that downwards pressure on prices. So I think that's what it's going to take for the condo market as well. Unless, of course, you have some policies that come in. I think the BC NDP, potentially in February, they said they were going to come out and do that. I think that's a possibility. So these are some of the sort of things that I'm looking out for. There's now a 70% chance, the market is pricing in a 70% chance the Bank of Canada will have another interest rate increase here in January. So we'll wait and see how that progresses. I think the unemployment numbers fell to in Canada fell to I think 10-year lows or something like that. So that's obviously substantial. But you know, again, a lot of this is very dependent on real estate. The Canadian employment numbers dependent on real estate also hit a new time high. I believe it's around 14% now. I just posted that on Twitter, so if you're not following me on Twitter, it's at Steve Saretsky. But the employment numbers that are dependent on real estate and residential construction, as well as finance, the fire sector, is around 14%. That's a new high. So you know, that's obviously anytime you start hiking interest rates and potentially affecting those markets, you can see the potential adverse effects it might have. I think that's very obvious, as well as why the NDP has taken they basically pulled back their stance on a lot of that. Obviously, BC real estate is 25% of the economy. So yeah, it'd be very interesting to see how 2018 shapes up, but I really wanted to put this short video together for you here to let you know, first off, that my podcast is out, as well as the year-end review numbers. I think those are extremely powerful. So shout out to Mike Jensen, who has been helping me with some of that stats. If you're watching this, you know I appreciate it. And yeah, that's all I got. If you have any questions on the numbers, put it in the comments below and I'll get back to you. All right, see you next Friday.